Right, we are live. This is Jeff Macke live. I'm Spencer Israel. The other guy, that guy, is Jeff Macke. And
Keeping it real.
Jeff,
I'm taking my hat off for the people.
oh man, you're fired up.
Yeah, sure.
I
Sure.
love it.
It's that
Yeah,
time of
we
the
have
year.
entered the retail portion of the earnings season, which I always call Jeff Macke season.
Economists call it the part of the earnings season that matters.
Yeah.
I mean, the meaningful part.
I'm glad, you know what? I'm glad you mentioned the economists because let's start with them. Let's start with this headline we got last week. I'm sure you saw it.
I did.
Retail sales in the US posted their first decline in this is a month over month in 9 months last month. So the government data is saying that people, Americans, are spending less than they were on stuff, on a basket of retail goods. This headline was all over the place last week.
Yep.
I want your take on this, and then we are going to talk about what some of the companies that are reporting this week are saying about what their own customers are doing. But before you even get to that, when you saw this, what was your reaction?
I'm not sure I'm allowed to say it, but I thought it was reductive clickbait bullshit. And I think it's just kind of an example. It's the headline that plays right now. You know, it doesn't play right now. The consumer's fine-ish, which we're having a really good year playing the consumers fine, which means they're spending money not everywhere, but at popular places. But you know, they just were dying to interpret this. You know what this was, Spencer? This was Prime Day being pulled forward. And if they would have bothered to look at the data or even given enough of a crap to dig into the data, they'd see that apparel sales were actually much higher in July. They had a great July. Things like office supplies, things like that you would buy, say, on Prime Day when the world's second largest retailer holds a massive sale and everyone else emulates them just because they invented summer Christmas, that pulled forward sales to June. It's not a huge deal. Again, this doesn't, that's not a cry that everything's great. It's a cry that everything's not terrible. Stop whining, you sissies. If you would have shorted all the retailers on this, you'd have some winners and a lot of losers. It's not tradable news. It's just stuff to feed the grist.
As with most things, government data related, there's the headline overall number, and then if you drill down, you can really see where that number comes from, right? What are the factors that went into that number? In this case, as you mentioned, Jeff, the online e-commerce segment, retail sales in that group fell the most. And that might have something to do with the fact that there was no Amazon Prime Day when there was in July of last year.
And there were a few headlines out there noting that. There were a few people saying it. But again, it's not as clickable as the sky is falling. Holy crap, the sky is falling. Get out of stocks now. And
So,
if just take the other side of that.
Online non-retailer sales fell. Auto retailer sales fell. Electronics and appliances retail sales fell. But what did not fall last month? Clothing, restaurants and bars, furniture, buildings and materials, right? And garden supplies, healthcare and personal care products, right?
Yeah. So people went out and got hammered and they bought some Alka-Seltzer and they're just buying different stuff because they're so worried about being poor, I guess. I guess that's the working theory here. I mean, I like to look at the actual performance of the retailers. That's why this week matters. And I think that's the point you're getting at, is when you actually hear from the companies themselves, it puts a little color to the picture. And like I said, you see the good companies reporting pretty good numbers and the bad companies reporting kind of bad. I mean, I saw Lazy Boy missed last night. And that's been taken as a sign that Americans are no longer buying furniture, as opposed to a sign that Archie Bunker's dead and no one's buying Lazy Boy recliner sofas. I mean, who gives a crap about Lazy Boy when you're actually we hear from Walmart tomorrow and we're going to take our cues from Lazy Boy today. I would not do that.
Here's my Lazy Boy chart I just pulled up. So it's having a pretty bad day today.
And not a great company to begin with. And when was the last time you heard of Lazy Boy talked about that? It's just, it's fine. whatever. I'm not here to bash Lazy Boy. I don't care about Lazy Boy, and I don't think
Yeah.
really most people should, is
Yeah.
my point, I guess.
Well, okay, before we get into the specific reports from this week that we've already gotten so far, and then we'll talk about the reports that have yet to come. Um, Forgive the maybe the dumb question, but why shouldn't we care about the government data? It's not like the data is false or wrong. It's still true data, right?
It doesn't make you money. I don't know. I mean, that's a harsh way for me to frame it, Spencer. And I'm sorry, I'm given to this bombast sometimes, and I've been up. I'm a little punchy. That's like me saying people shouldn't like the harpsichord. If you want to play the harpsichord, that's just fine. I don't enjoy the music and it doesn't make me any money. That's also true for the economic data. I don't know how to make money from that. There's not, there's not a trade there. It leads you to just kind of bad thinking. The Big Short was a good movie. If you went out and decided to be a full-time short seller after that movie came out, you you are just you're poor. You're not watching this broadcast, so that's not really our audience. But it's again the sky's falling narrative always plays.
So you are always more focused on what companies are saying because a they would know, right, what's happening with their own business, and the government data is a little bit esoteric, right? It's telling a broad macro story when really you can't paint the consumer and the retail industry with one broad brush like that because there are always going to be winners and losers, right? So it's just impossible to make broad sweeping statements like the consumer is weak, the consumer is strong. It's neither weak nor strong. It's actually both at all times, right?
Yeah, it's a competitive, mature industry, and
Yeah.
so it's a roughly zero-sum game. You can throw some inflation in there. You can make it a plus 1 or 2% game,
Right.
but ultimately, kind of when Target wins, they usually take share from someone else. That's what we saw today. Even if you look at the Home Depot and the Lowe's of the world, Home Depot took a little share. Lowe's was worse. You end up with a consumer. No one's buying houses. We knew that before. We knew that in a lot of different ways. You hear it from the companies. There's no reason to panic. The market, frankly, doesn't care all that much. Home Depot has moved again 1 or 2%.
Total snooze fest, man, on the Home Depot report. Whew.
Yeah, just hey, this is a bunch of smart guys who are tied completely to the housing market. They have absolutely no control over it. You might as well run a ski lift. It's it's we're farmers. It didn't rain all year. The crop sucks, we'll go on. Maybe the folks there are just, it's a good company, but I'm not sure they control their own destiny. It's like we say about Levi's, where it really just could be run by AI because it's denim is cyclical, and when it's hot, people will buy it. When it's not, they won't. And Levi's can't do anything to change
Yeah.
that.
So, in other words, sometimes companies come out and they say things that are patently obvious, and the market just kind of shrugs because, like, yeah, duh. Like in Home Depot and Lowe's case, their businesses are pretty directly tied to the housing market. The more houses people buy, the more likely they are to do renos and big projects and all that jazz. And if that's not going to happen, if the housing market's going to be frozen, then Home Depot and Lowe's are going to struggle. And that's exactly what they said. No surprise there. On the other side of the coin, you get a company like Target, who reported this morning. Correct me, right? This morning,
Yep,
and
they did. They did.
what did they say?
They said that their turnaround's just coming along quite nicely, thank you. Not tremendous. It would be great for them if there's a huge consumer tailwind, but the whole idea of Target, the reason it was my stock of the year back in December, was the hope that they would kind of proceed the way they are proceeding, which is they're taking care of the low-hanging fruit first. And so they've gone about kind of cleaning up the stores, moving around the fixtures a little bit, changing grocery, and they've got some bigger stuff that takes time. Clothing takes time. You need a couple fashion cycles. That's where Target really makes their margins. And so they're not hitting the cover off the ball yet, but they've got a plan to kind of get back to at least where they were before. Whether you think it's overbought or actually has moved room kind of depends on where you bought it. From the perspective of someone who bought it in December, it's was I a little tight coming into today? Yes, that's why I've been up for 400 hours. I'm not going to lie about that. We had a rather significant position, still do, but over a 5-year term, you're still down 30%. So, that seems like it's just kind of a rebuilding turnaround story. This is what they look like. This is why everyone pays attention to the Nikes and the Lulus of the world. Not because they want to buy them now, but when they turn, you have a little space and you can kind of buy them. And that's what's happening at Target right now.
All right, all credit to you. As you mentioned, this was your stock pick of the year back in January that you sent out for your members. I know you were long in multiple ways, shapes, and forms heading into this report. So, congrats to you. I hope you lightened up a little bit today in light of the positive reaction to the
Always tip the
report.
dealer, Spencer. You gotta tip the karmic dealer. So yeah, of
Always
course I
tip
did.
your dealer. Always
Yeah.
tip your dealer. That's right. So, all right. It was so in Target's case, it was a strong quarter. They're saying our business is doing just fine, or maybe not just fine, but we are on the right track. We are
They are
right. This
super aware. This is a company that spent 5 years stepping on their own toes, as I put it. That was not the word that came to mind when I thought of the sentence. They're stepping on something. But, it's they went straight downhill for, again, 4 or 5 years, and so the turnaround's gonna take a while, but they're going about it in a systemic way. They're fixing it kind of section by section and just delivering the goods. Again, it's gonna take a while, but there's enough of a consumer demand out there that traffic goes up. They improved the store and more people showed up. To me, that just means capitalism works, and I want a flag behind me. Can we add a flag? Is there a way to get a waving
sure, sure,
flag?
sure,
Because
sure, sure.
this is the way capitalism is supposed to work. We improved our store and more people showed up to shop there. That's good. Congratulations. If this was 2009, kind of before we bottomed, no one would show up to your store no matter what you did to it. So again,
Look,
it's a little much to say the consumer is in trouble.
traffic up 36%, comps up nearly 4%. That's real.
3.6. It's not that exciting. 40% would actually they'd have to build more shopping
Oh, I'm
mall
sorry. I'm
space.
sorry.
Yeah.
3.6. Yeah, I'm sorry.
Yeah,
Right.
again, it's a little baby
All right.
turnaround.
All right.
But they improved on pretty much every front, all 6 of their categories. And so the reason that we look at Target, the reason Walmart's the most important company on the earth is because they sell a little bit of everything, right? Because they sell clothes, they sell food, they sell kind of healthcare goods, they sell toothpaste, they sell anything you really want. And they'll talk to you about those different categories. Target has 6 of them. Every single one of them was higher. They did best in kind of groceries and housewares, and that's terrific. They're still waiting for a turn in apparel, but everything was higher than it was last year, every single category. That didn't give the Bears much room to move with. You can see the check. I drew this, you know, early. Let's say that's 3:45 a.m. my time by the timestamp on the little chart there. So it's they're fine. I guess is my
Yeah.
point. I'm a little schizophrenic here, but it's like the stock was initially down 5% on this. People were really waiting to lunge into it, and they just didn't give the Bears a foothold. They were very rational on the call, very much in touch with kind of what's wrong with the store, and that's what you want to see to management. This is what's wrong. This is how we're going to fix it. Watch what we do quarter after quarter. Perfect. Just absolutely couldn't have written it better myself.
All right, an arrow in the quiver for the Bulls with Target, and likewise with this next one. I know. I mean, we've talked about how this stock, like whenever they cite data about how terrible it is to buy IPOs, they're usually right. This stock bucks the trend. This has been an unbelievable IPO, right? In the
Just
last
incredible.
just
Just incredible. Viking is
remarkable.
is the antithesis of like the carnival riots. You can get on carnival and getting roofied is kind of part of the experience. It's just sort of assumed stuff like that's going to happen. You can get on Disney and it's just, here's the kids section of the ship and it's loud and a little chaotic. Vikings like we don't want your kids. We just kind of want sophisticated people with tons of money to cruise around and see European towns. So the not wealthy enough to own a yacht, but wealthy enough to take $100,000 vacation crowd is still
Ah,
cruising. So
okay.
I that comes as a big relief. I think we all feel pretty good about that. Congratulations, centimillionaires.
Yeah. All right. Bottom line, people with money still spending. Let's talk about maybe a different end of the of the consumer spectrum. TJ Maxx and Ross stores. I mean, people with
Yeah,
money can shop here too, but
right, right. TJ Maxx is having kind of a little fallow period, if you will. It was not a great report from them. The guidance wasn't terrific. It was not very TJ Maxxian. The reason I've got Ross on there, these companies are really pretty much the same basic idea, only shooting at different total, different economic classes. Ross is more of a kind of lower end version of TJ Maxx, but the idea is the same. They buy off price goods, they put them in the store, and they make a little treasure hunt, meaning they underprice a few goods, and everyone likes shopping there. We'll see. They report tomorrow night. Now, it's not bullish if both TJ Maxx and Ross miss. Some permutation of what we saw with Home Depot Lowe's, where Home Depot was kind of fine, well managed. Neither one's seeing a housing turn. That wasn't realistic to expect. I don't expect Ross to have 12% comps or something like that. But if they kind of gather the market share that TJ Maxx lost, it's not so much a harbinger of doom for the whole economy. It just means the shopping spending pattern has shifted a little bit or is currently, a little more cautious. Listen, it's not that there's not anything to the idea that there's reason to be cautious or conservative here, starting with interest rates, which actually does affect your life, and working all the way down to, gee, we're tired of wars and we're a little confused about why we're in one. But none of that stuff has really hit the consumer yet. They're going to movies, they're going where they want to shop, and it's just not uniformly bad.
All of this is great, but this entire narrative can change tomorrow with Walmart. As you
The
said,
big fatty.
the most important company in terms of economic read through in America. And if Walmart comes out and paints a negative picture, then that's all that really matters, right? You have to, I think the point that Jeff is making is you have to listen to what the companies are saying, not necessarily what the government data or the headlines tell you, right? What is the company saying? So if Walmart comes out tomorrow and says, yeah, our customers are tightening their belts, they're downsizing, they're spending on cheaper items, then yeah, that would be a real cause for concern. Or they could say the opposite.
Yeah. Yeah. Well, there's a little bit, there's always a little bit of sandbagging. What you have to remember with Walmart is when they say things like the consumer's cautious, so we're rolling back prices, that's Walmart actually doing a little advertisement within a conference call. That is not in fact them complaining about the economy really being weak. It's them saying we have the best prices. It's boy, does anyone empathize with the American struggling consumer more than Walmart, which is still like 30% insider owned. So sure, okay, but they cut prices all the time, so that's just an ad for them. You got to look at the numbers. I want to hear what the discretionary side looked for them, what apparel looked like for them. But they will for sure have done well in groceries. They will say, our customer is looking for the best value, and that's why they come to us. That's not an economic statement. That's just a hey, shop here statement.
That's just a humble brag.
It's a humble brag. Sure.
Right.
Nothing wrong with that. Nothing wrong with that. But they sell everything and they sell more of it than anyone. And it's a really well-run company. So, they're the big daddy.
This is the nuance. This is why I come to you, because you always talk about how important it is to pay attention to what the company tells you. But then you also know enough to know, listen, when Walmart gets on the mic, they're talking and they're cautious, and they're saying that consumers are being extra price sensitive. That's really just Walmart saying, look how amazing we are. We got the lowest prices, right? So then you gotta read the tea leaves on that one. There's so much nuance to this, Jeff.
Yeah, last month the president announced that he just got off the phone with Timmy Walmart, and he's demanded that they cut prices, and so they're going to do that to help the consumer. Walmart sort of embraced that idea and sort of was just like, ooh, don't politicize us, please, for the love of God, don't politicize us one way or the other. Like, we serve all Americans. We're a $1 trillion retailer. We really prefer all the people to feel comfortable here. So but it did serve as a nice little ad. They were kind of not going to say cut prices. Are you kidding me? Business is fantastic. We're gouging customers like crazy. You should see our margins. It's ridiculous.
Jeff, how would we know if Walmart is like really just sandbagging it? Because obviously everyone's going to compare the headline numbers to the estimates, and that's not Walmart's doing. That's just what the estimates are, and the numbers are what they are. But like, in the commentary, are there like certain phrases to listen out for that you'd be like, oh yeah, this is them This is them just lowering the bar for future Walmart. Is all this is, right?
Here's your pattern. The beat and cautious guidance is really the two-step of just kind of sandbagging. It's you kick the crap out of your trailing estimates. Q2, we beat guidance by 25 cents a share. It was amazing. It was fantastic. The whole world's kind of fall apart in the third quarter. We have a sense that things will be really bad. It's like when Lou Holtz used to coach Notre Dame. They would beat USC and at the time like the number 2 school in the nation. Then Holtz would come out and he'd say, "We can't look past Northwestern next week. They've got some great players. I'm really worried this team isn't as good as they think they are. We're probably going to lose."
Dude,
You lower the bar.
Nick Saban would say that too. He would say, like, I don't know how we're going to beat this random D3 school that we have to play.
Yeah, I'm glad we got past Auburn, but man, Tupelo State next week for homecoming. That's a game we really got to watch out for. That's going to be one that's a problem for us.
Right.
So that's one way you can tell is trailing. If they miss on trailing results, it's a problem. Walmart doesn't miss very often, and so that would be bad. And that's a really crap looking chart, to be honest. I mean, it's not great. It's not cheap. You look at Target, they put up pretty good numbers, but that's trading at 20 times earnings, like 22 times forward earnings. If you just assume that kind of the high end of their range is about where earnings come in, that's fine. Walmart's at 40-ish. That's kind of expensive because they're offering about the same level of growth in terms of forecast. I mean, it's Target's made themselves relevant again in terms of being a tell for what's going on in the economy just by executing. And so, like Walmart, I think Walmart's expected to do 4% comps. Target was expected to do about 3. They beat that handily. We heard good things from Amazon's retail sales, even if you cross out Prime Week. So we've got a consumer that, is responding to both bargains, which they always do, trends, which they always do, fashion and just kind of taste. They're certainly not withholding themselves. They're going on expensive cruises. They're buying new clothing. They're going out there and spending, but it's selective. Go figure. It always is.
Yeah, I'm just going back and looking at Walmart's earnings history, and how it compares to estimates. This is a company that pretty much always beats the estimate on the top and the bottom line. They miss on a rare occasion on the bottom line, the earnings per share. As far as the revenue goes, though, I mean, there was a spell there back in like 2013, 2014, 2015, even 2016 and 17, where they were missing on a somewhat regular basis. But this is a company that over the last decade kind of goes like clockwork. They haven't missed the Wall Street's revenue estimate. They haven't missed it. I'll tell you when they last missed it. That was Q1 of 20. Oh, that was Q1 of 2020. What happened in Q1 2020? I wonder what happened then.
It was peak America. Man,
Yeah.
knock it down. I miss COVID. I think everyone does. Walmart doesn't, though. That was the reign of Dougie Mack. That was right around 2016 is when Doug McMillon, their prior CEO, came in. He was a terrific CEO. He always hit numbers. And by the time he left, he just had developed a real relationship with the analysts that followed the company and a consistent, mature, relaxed style of kind of communicating the results. I see a little bit of that in Fidelki, who's the new CEO of Target. It takes a while for Wall Street to get to know the CEOs. I'll give you another example, TJ Maxx, a constant beat and guide lower type of company. And today what they actually did was they beat numbers and then they guided their own guidance higher, but that was still below where the street was. And that's what Wall Street's having a problem with. So, it's they have a new CEO as well. They're getting used to just the cadence of what these managers are reporting. So, we saw those do you call that a miss? Do you call it a beat? They took up their own internal estimates, but they weren't as high as where Wall Street is already because Wall Street's trying to price in the sandbag. I think TJ Maxx has more of a communication problem than anything else.
All right, this is a rundown for a few of these reports that we've talked about. But like I said, Walmart will be the determinant for the narrative tomorrow. Speaking of
and
tomorrow,
again, you saw if you look at that sheet, though, we got an impact, and I want to talk about tomorrow too. But the important thing there, look at the EPS beat every single time. Every single one of those companies managed to pull their act together enough, despite the uncertain consumer environment, to come up with a quarter that beat. It's just the guidance that's the difference, and the comp stores are not terrific, not horrible. It's just it's an uncertain world. We live in a world of uncertainty, and that's why I'm here to try to help guide people through it.
Retail continuing the broader market trend this earnings season. Let's be honest. Most earnings seasons where most companies beat the estimates. This is just a fact of life, right? So that's just the way it goes. Okay.
But most segments of the economy trade a lot better than the retailers do. The advantage of trading this group is that, it's once they're not talking, the reason that I kind of tipped the dealer on some target, it wasn't that there was anything wrong with that quarter. It's not that I don't like the long term more than I did,
Yep.
2 hours ago, because I certainly do. It's simply that, it's once the companies stop telling you things are fine, then the public's mind just turns to all the headlines that are, oh my God, the consumer's falling apart. Only $700 million worth of people went to see Spider-Man last week.
Right. By the way, movie box office had like an all-time high for a given week a few weeks ago. So crazy stuff.
Crushing.
Right. Speaking of tomorrow, special live event on the calendar. I believe it's 3:00 Eastern time. Jeff and I are doing pretty much a much longer version of what we just did. We'll talk about Walmart, obviously, but we're going to really get into like Jeff's philosophies. And I called it the retail powwow. I don't know what else to call it. It's really what it is. We're going to get into Jeff's philosophies, his strategies for actually trading this group of stocks that he's been crushing all year. The stream will be free, but it will not be on YouTube. Here are the two ways to get access. Number one, well, actually, there's a link in the description. If you want, you have to go to that link and you have to literally enter your email, and we'll give you a reminder tomorrow. Or you can sign up for Jeff's the Macke letter, right? I'll drop that link in the chat as well. Everyone, that's Jeff's free email. He sends probably 3 or 4 times a week, just his musings on markets and retailers. If you are a subscriber to that, you will also get the live link for tomorrow. So you can use the link that is in chat or in the description. That's a better suggestion. Alan Trigger says it's a retail rumble. That's what it is. It's not a powwow. It's a retail rumble tomorrow. We're going hard in the paint on Walmart. We're going harder in the paint on Target. We're going to talk about what Jeff looks for in a retailer, what he looks for at the mall, what he looks for in the stocks, what he looks for in the charts. We have a whole thing planned out. We're going to talk about his winners, how he picked them, why he avoided certain companies. It's all going down tomorrow. Use the link in the chat and description. And yes, of course, as always, SM Trez, the replay will be made available to all who are there. So I'm excited. That's tomorrow, 3:00 Eastern, not on YouTube, on our site.
And who knows? It's after Walmart, before Ross. We might even have a trade idea out of there. You never know. It's going to be organic. There might be just something a little bubbling under the surface. It's going
to be fun. All right. I hope to see you there tomorrow in about 5.5 hours. It's going to be a good time. So all Jeff, right, and then Jeff, I'll see you tomorrow on the morning show. Tomorrow we'll talk about Walmart a little bit in the morning show, and then we'll just tease it. We'll tease the reaction, and then we'll have more to say at 3:00. So a lot going on. It's like I said, it's Jeff Macke season. It's retail earnings season, which means it's Jeff Macke season. He's a busy man.
I'm a busy man. I'm feeling my age. I'm not going to lie. I had 4 conference calls into the day, 4 earnings. I had the Vikings cruise guys. You go a little schizo if you're listening to Lowe's and Viking. You got those crazy Europeans. But I'll be there. We'll be there tomorrow.
Get some rest. I'll see you tomorrow morning. All right.
All right, man.
All right.